What would happen if one day the US dollar, the symbol of global economic power, was no longer the safest currency in the world? It sounds unbelievable, even impossible. Yet right now, a ticking time bomb is quietly counting down inside the heart of the American economy. That bomb has a name: national debt. And the number behind it is staggering, over $33 trillion. To put that into perspective, this debt is larger than the combined economies of Europe, South America, and Africa. For nearly a century, the United States has been known as the Bank of the World. Nations, both allies and rivals, have bought American bonds as the ultimate safe haven. The global financial system rests on a single, unshakable assumption: the dollar will never fail. But what if that changes? What if the United States, the most trusted economy, suddenly becomes the weakest link? When trust falters, when bonds are dumped, when the dollar loses value, the shockwave won't stop at Washington. It will spread across the globe, reaching into the wallets of everyday people, from New York to Tokyo, from London to Hanoi. So the real question isn't, will America face a debt crisis, but rather, when will this bomb explode? And will we be ready when it does? For nearly a century, U.S. Treasury bonds have been considered the safest asset on Earth. Governments, central banks, and pension funds trusted them with absolute certainty. To hold American debt was to hold stability itself. This trust made the United States the bank of the world. Whenever crises struck, wars, recessions, or financial meltdowns, money always fled to the dollar. U.S. debt was not a burden, it was the foundation of global finance. But cracks began to appear. The turning point came in 2008, when the global financial crisis shook confidence in America's financial system. For the first time, the world realized that the too-big-to-fail United States was not immune to collapse. Since then, the debt has spiraled upward at an uncontrollable pace. Trillion after trillion was borrowed to rescue banks, fund wars, and support stimulus packages. Today, the United States owes more than $33 trillion, a figure so massive that even the interest payments alone surpass the defense budgets of most nations. So here is the frightening question: what happens if the United States can no longer pay its bills? A default by America would not just be a domestic crisis, it would be an earthquake felt in every financial market on the planet. Banks would freeze, currencies would tumble, stock markets would plunge. From Beijing to Berlin, from Sao Paulo to Singapore, the ripple effects would be devastating. And all of this hinges on one fragile belief: that the United States will always honor its debt. But as history shows, even the mightiest empires can fall when that belief is broken. After the 2008 financial crisis, the United States turned to a radical solution: printing money and slashing interest rates to nearly zero. Borrowing became incredibly cheap. Corporations, consumers, and above all, the U.S. government loaded up on debt as if it were limitless. The age of cheap money had begun. For more than a decade, this strategy seemed to work. The economy recovered, Wall Street soared, and Washington borrowed trillions without immediate consequences. But beneath the surface, the debt balloon was quietly expanding, waiting for a trigger. That trigger came in 2020. The COVID-19 pandemic froze global trade, crashed markets, and threatened mass unemployment. To prevent total collapse, the U.S. government unleashed a historic stimulus. Over $5 trillion was pumped into the economy within 2 years. Checks were mailed to households, businesses were rescued, and unemployment benefits skyrocketed. It worked in the short term, but the cost was staggering. For the first time since World War II, U.S. debt surged past 100% of GDP. The United States officially owed more than its entire annual economic output. And the world began to notice. China, Japan, the United Kingdom, Canada, once the largest buyers of U.S. bonds, started quietly reducing their holdings. They were no longer convinced that American debt was risk-free. These moves are small on the surface, but they send a powerful signal. Global trust is starting to fracture. The very foundation of the dollar's dominance, faith in America's ability to always repay, is no longer unshakable. The age of cheap money has ended, and in its place, uncertainty is rising. The storm is no longer distant. It is already gathering above the United States. Every single day, Washington spends $3 billion just to pay interest on its debt. Not to reduce the debt itself, only to service it. This interest burden has already surpassed America's defense budget. In other words, the United States now spends more on interest payments than on the military that protects its global power. For the average taxpayer, the picture is even more alarming. 1 out of every $5 collected in taxes is now burned to pay creditors. By comparison, in France, the UK, or Japan, less than 10% of tax revenue goes toward interest. America is entering dangerous territory, and the danger doesn't stop at home. Imagine what happens if major foreign holders, China, Japan, or Europe, decide to sell off US treasuries. Bond markets would collapse, the dollar would lose value, and inflation would roar back. Imported goods, from cars to smartphones, would skyrocket in price. The cost of living crisis would hit every American household. Some might dismiss this as impossible, but history offers chilling warnings. Venezuela was once one of the wealthiest countries in the world, fueled by oil riches. Yet decades of reckless spending and debt dependence turned it into a collapsed economy, where a loaf of bread could cost a month's salary. The lesson is clear. No nation, no matter how powerful, is immune to the laws of economics. And America is running out of time. The US dollar is not just America's currency. It is the backbone of the global financial system. For decades, central banks around the world have stockpiled dollars to stabilize their own currencies and secure international trade. Oil, food, technology, nearly everything that moves across borders is priced in dollars. But what happens if confidence in the dollar begins to fade? The result would be nothing short of a global domino effect. When trust erodes, central banks and investors will rush to protect themselves. Selling off US assets would weaken the dollar further, triggering higher inflation in the United States and turbulence in international markets. Suddenly, the safe haven that anchored global finance could turn into its greatest source of instability. We are already seeing the first cracks. China and the European Union are actively seeking alternatives. China has pushed for greater use of the yuan in trade settlements, especially with energy producers. The EU has discussed strengthening the role of the euro. At the same time, many nations are buying gold at record levels, a clear sign they are hedging against dollar risk. And then comes the digital frontier. From state-backed digital currencies to decentralized cryptocurrencies, the search for alternatives is accelerating. No single option is ready to replace the dollar yet, but the movement itself tells a powerful story. Trust in the dollar is no longer absolute. If the dollar stumbles, it won't just be America's problem. It will shake every economy, every business, and every household on the planet. The United States stands at a crossroads, but neither path leads to safety. The first option is brutal austerity, cutting government spending on a scale not seen in generations. That would mean shrinking defense budgets, reducing healthcare programs, and slashing Social Security, the very benefits millions of Americans rely on to survive. Such cuts would trigger political chaos at home and unrest across society. For a country built on global military dominance and domestic stability, this is a deeply painful road. The second option is no less dangerous, printing more money to cover the debt. In the short term, it may look like an easy fix, but history shows where this road ends, in the flames of hyperinflation. Once the printing presses start running, the value of the dollar erodes, prices spiral out of control, and savings evaporate. It would be an act of economic self-destruction. Both paths carry devastating consequences. Either America weakens itself through harsh austerity, or it risks turning into the very crisis it once warned other nations about. There is no easy solution left on the table, and that is the brutal truth. Every road leads back to the same reality. The United States cannot outrun its debt storm. The only question that remains is not if the storm will strike, but when.